2, 1. Oh, we're already counting down. Sorry. Welcome, Jonas and Ashley.
Epic Updates.
Epic Updates.
We are, I don't know when you're going to be watching this video, but we are mid-October, and it is a chilly 118 degrees. I don't think it's really that hot.
It's not that hot. We
but
just got in the car.
It's so wild
Blazing.
how hot it still is here in Phoenix. It's wild.
Yeah, absolutely. Well, we're not here to talk about the weather, though.
We're not.
So,
We're going to talk about interest rates.
Interest rates.
Yeah, and the rates with the Fed, and why the heck are interest rates still so high?
Why?
And just kind of all of the backstory with all of it, so you could better
It's
understand.
like the dead bounce.
Yeah.
Rates dropped and then bounced back up.
They really, really did.
What do
Why
we
is
say?
that?
What do we say? What's our saying?
We marry the house and date the
Date
rate.
the rate. So here's where we're at. Fed had their big announcement September 19th, leading up. Everyone was holding their breath. Everyone's excited. Mortgage rates leading up 2 to 3 weeks in, nice drop, a little over 1%.
Yeah.
Pretty good little dip there.
Yeah.
We're in the sevens, dropped into basically around 6 plus or minus. Wonderful, love it. Fast forward, Fed drops the rate, half a basis point. Good news. What do rates do? Jump back up about 0.5%.
You're like, what? How did that happen?
What is
why?
happening?
Yeah.
What is happening? I'll tell you what's happening. That's why you're tuning into the video. Data came out. So data tends to have a lag effect, and
That's a good point.
What the Fed does, as we've mentioned time and time again, isn't par for where mortgage rates go. The two go in tandem, but again, the mortgage rates were basically pre-baked in on the anticipation of the Fed drop, which happened. So basically all the anticipated drops were already kind of worked in going up to that moment. Fast forward, employment rates or employment data, housing starts. Believe it or not, there was actually good economic data. So what happens? People run away from the bonds market. Rates go back up. So we had people that were watching and waiting for the rates to drop and continue to drop, and unfortunately they reversed course and went the other way. Had a couple people looking to do a refinance, priced them out because they didn't rate lock. They were trying to ride it out and make it happen. Temporary, of course.
Yes.
This is all temporary, but for those of you that are watching, and trying to time the market and where the rates are going to go, best you can do is just draw a line in the sand, and when you get there, make your move, right?
Yes. I mean, I think it's really difficult for anybody to time the market, and I think what somebody is looking for is just very, very situational, and we've said it before. There are a few ways that you can hedge your bets against the interest rates, though, in today's market. Things like seller concessions for rate buy downs. Instead of buying a resale, buy a new build. They're by far and away the most competitive interest rates. So just because the rate is up, it doesn't necessarily mean that that's the rate that you in your situation are going to get on your 30-year mortgage. So if you have questions about what interest rates are like right now, we'd be happy to point you in the direction of some of our most favorite people, our preferred mortgage brokers. And if you want to know whether or not things make sense for you, reach out to us, because it's very personal.
It is. Guys, as always, thank you so much. I hope to hear from you. If you ever need anything at all, don't hesitate to reach out.
Yeah.
Please subscribe, click,
Like,
hit that bell.
share, all the
So
things.
you can get all the updates. If you're honest with YouTube, if this is going out to our database, we love hearing from you guys, and it's always great to hear from you. So just let us know how we can help.
Yeah,
Thanks so much.
absolutely. And on Facebook, follow, like, all the things, comment. But yeah, if you need us, we're here. So thanks for watching.
Appreciate you guys. Bye.